All right, good morning. I'm going to post in chat. If you can't hear, check the audio on your screen. Good afternoon and welcome to the webinar on Pennsylvania taxes for new businesses. Let's see. We have 23 attendees. We have a few panelists. The Pennsylvania SBDC is partnering with the Department of Revenue to present a four-part series offered monthly. Today's topic is PA taxes for new businesses, and the other three topics listed on your screen, getting with MyPath, sales tax basics, and withholding basics. We hope you plan to join us for the other three topics as well in the months ahead. Okay, so today's presentation will help you learn and understand the rules, laws, and procedures for following an entrepreneur as a business owner. Most tax delinquencies often stem from misunderstanding Pennsylvania laws. And procedures. So we'll highlight some of the common errors, discuss income tax, sales and use tax, exemption certificates, and employer withholding. In addition, you will learn some guaranteed tips for success and your rights as a Pennsylvania taxpayer. So today's webinar is being recorded, and we'll share that recording with you along with any of the presentation slides and our webinar series flyer as well. All participants have been muted and video disabled. So if you have any questions for the presenter, please enter them in the Q&A. And I believe there's some people from the state. Rachel, I'm going to add you as a co-host so that they can answer the questions as we go. Let's see. So add them into the chat, please. If you have questions to ask the SBDC or myself included, add them in the chat. Otherwise, use the Q&A. Okay. And then, okay, I need to give you a quick introduction to the Small Business Development Center. There's 15 of us across the state. We offer no charge and confidential consulting for for-profit small businesses. That's 500 employees or less. Our main training section for across the state, across all the different centers, is located at pasbdc.org. And we do a lot of the knowledge side of your business. We don't do lending. We don't have the passion you do, but we can help you with consulting, research, and training. Okay. Here's the 15 regions, centers that we have. Obviously, we cover the entire state. And everywhere the U.S. touches, there is an SBDC connected to it. So even if you're in the U.S. Virgin Islands, someplace like that, there's going to be one down there as well. And then you can connect to sign up for to be a client of the SBDC if you're trying to get your business off the ground. Additional resources we have both at the state level as well as our clarion.edu/SBDC is our center's site. And then the contact information primarily. Typically, Cindy Nellis would be providing the introduction and hosting these. She's our director. Today you get me. I'm Jason Strom. I'm one of the consultants here. And so today I get to announce Alicia. She has over 12 years of experience working for the Pennsylvania Department of Revenue. She currently works as the chief of the Customer Outreach, Relations, and Engagement Division within the Customer Experience Center. Let's see here. She is responsible for developing relationships with external stakeholders and coordinating any outreach and educational initiatives, just like today, provided by the department. She began her career as a tax account collections technician, working in the Collections and Taxpayer Service call center, and moved into various roles throughout the collections and customer service area. Her work experience has provided her with a vast knowledge of PA tax administration and the inner workings of the department, which she uses to provide positive experiences for the department's customers and stakeholders. You guys are both. All right, Alicia, go ahead and take it away.
Thanks, Jason. Let me just make sure I can share my screen real quick. All right, you seeing my PowerPoint okay?
Yes, I can.
Awesome, thank you. All right, so good afternoon, everyone. Thank you for joining us today. As Jason mentioned, my name's Alicia Gauntz, and I'm the chief of our Customer Outreach, Relations and Engagement Division here in the Customer Experience Center at the Department of Revenue. So I know that sounds like a lot, but essentially my area is responsible for the outreach and education efforts provided by the department. I am honored to have the opportunity to talk to you all today about Pennsylvania taxes for new businesses. In our experience, folks work really hard to try and comply with Pennsylvania tax rules and regulations when starting a new business, but that's sometimes easier said than done. We know that taxes are complicated, so our goal is to walk you through some high-level information that you should know as a new business owner, and then point out some common errors to avoid that can ultimately save your business both time and money. All right, so this here shows our agenda for today. You can see we're going to talk about a few different tax types, including income taxes, trust fund taxes, and business use tax. In addition, we're going to talk about exemption certificates, tips for success, and your rights as a taxpayer. All right, so let's get started with income taxes. Businesses have an annual income tax filing requirement, the same as any taxpayer. The type of business structure that you have determines what form that you're going to use for filing those income taxes. Sole proprietors will report income and expenses using PA Schedule C, profit or loss from business or profession for each of their businesses. The owner of a single member LLC that receives net profit income reports its income and expenses using the PA Schedule C as well. The owner of a single member LLC that owns and operates a rental property reports its income and expenses using PA Schedule E, rents and royalty income or loss. And then partnerships, both general and limited, are required to file the PA 20S, PA 65 information returns, and provide each PA resident partner with a PA Schedule RK1 and each non-resident partner with a PA Schedule NRK1. If the partnership is taxed as a partnership for federal income tax purposes. All right, I did see a question come in. Somebody asked if we will be sharing these slides. We do share the PowerPoint with Cindy, and she will send it out to all attendees after the session. All right, so in addition to income taxes, you may also have what we call trust fund taxes. So trust fund taxes are collected by the business owner and then held in trust until they're paid to the Commonwealth. There are 5 taxes that represent trust fund money. Today, we're going to focus on 2 that will most likely pertain to your business, which is withholding tax and sales tax. It is important to remember that these taxes must be reported timely and remitted in full to the Commonwealth. Again, you're simply holding these taxes in trust until you file and pay. Please keep in mind that these funds should not be used to cover business or personal expenses, and we suggest that you keep these funds in a separate account until you are ready to remit them to the department. So this slide here shows all 5 taxes that represent trust fund money. Some or all of these may pertain to your business. Withholding tax usually occurs when an employer withholds state income tax from an employee's pay and remits the money to the state. Sales tax is levied on the sale of taxable tangible personal property and certain services. The next 3 taxes here are mainly associated with vehicle leases and rentals, as well as the new tire fee, and they collectively fall under what we term PTA taxes and fees. So PTA stands for Public Transportation Assistance. The vehicle rental tax pertains to car rentals from businesses with an inventory of 5 or more vehicles for rent. And then the tax on liquid fuels is just what it sounds like. This tax is endured by the consumer, although the distributor is liable for its collection and payment. Please note that trust fund taxes must be accounted for on the accrual basis of accounting. So accrual accounting looks to match revenues and expenses based on the business cycle of a firm rather than the actual inflows and outflows of cash. So therefore, sales tax liabilities are recognized at the point of sale and not when the cash is actually received. So we'll talk about that a little bit more later on. All right, so let's dive into each of those tax types a little bit deeper. I know that this is going to be a lot of information that you get today. We're going to move through it pretty quickly. Again, you will get a copy of the slides. There are a few folks on the call here that can help answer questions. And if there are any lingering questions that we don't get to, Cindy or Jason can gather those and send them to us, and we can get the information back to you. So first and foremost, what is withholding tax? As I mentioned, withholding tax is usually when an employer withholds PA personal income tax from an employee's pay and remits the money to the state. In MyPath, which is our customer portal, you will see withholding tax broken down by 3 different withholding types. So the first withholding type is employer withholding. That applies to regular W-2 employees. So any employee that you hire and you issue a W-2 for, you're going to have an employer withholding account. Next, we have the other income withholding. This is for non-wage withholding reported on a 1099 miscellaneous or a 1099 NEC. So typically this would apply to small businesses that have or hire independent contractors. If you need assistance with determining whether an individual is a W-2 employee or an independent contractor, you will need to determine things like, is the worker being hired for a temporary project? Can they choose where and when the work is performed? Do they use their own materials for the work performed? Are they paid a flat fee or an hourly rate that's invoiced? As a rule of thumb, if you answered no to all the questions, chances are they are a W-2 employee. If you're uncertain about whether someone's a W-2 employee or an independent contractor, you should complete the federal form SS-8, and then the IRS will make a decision for you. Looping back to the types of withholding, we mentioned that there are 3 types. So the third and final withholding type is retirement withholding. This is reported on a 1099-R, and it applies when withholding is taken out on retirement income. In the state of Pennsylvania, withholding is taken out at the time of the retirement contribution, not the distribution, provided certain qualifiers are met at the time of withdrawal by the employee. So this is likely not going to pertain to business owners. Most of the time, business owners are going to have a third party who's administering their retirement plans. So a lot of times that doesn't apply to you at all. The next question here is, when do I withhold? So if your business is a sole proprietorship, partnership, association, corporation, government body, or other entity that employs 1 or more persons, it is required under the Internal Revenue Code to withhold federal income tax from wages paid to an employee. You're then required to withhold and remit Pennsylvania personal income tax from the compensation that you pay employees. So therefore, your simple answer here is every time you issue a paycheck, there should be withholding. Pennsylvania law requires employers to withhold Pennsylvania personal income tax from employees' compensation in 2 common cases. So when a resident employee performs services within or outside of Pennsylvania, or when a non-resident employee performs services within Pennsylvania. So most of the time that's going to apply to any employees that you have. Currently, Pennsylvania's personal income tax rate is 3.07%. So that means you should withhold 3.07% for any employee who lives in Pennsylvania, regardless of where the work is being performed. And you must withhold 3.07% for any employee who lives outside of Pennsylvania, but they're doing work in the state of Pennsylvania. The next question here is, when is it due? The current schedule for employers to withhold and remit employees' taxes on wage and salary income can vary. The frequency for remittance is based on the amount of withholding that is required. So the greater the amount of withholding, the more frequent that you are required to remit that to the state. The return itself should be filed every quarter for this tax, And then there is a W-2 reconciliation that is filed at the end of every year. All right, and then lastly here, how do you file and pay? The department does have a customer portal called MyPath for customers to electronically file. So MyPath is an internet-based filing system that allows taxpayers to file returns and make payments electronically without any cost. You would go to mypath.pa.gov and sign up for a user profile. The MyPath customer portal does have both logged in and non-logged in functionality. But most of the time, business transactions are going to be completed as a logged in user. Therefore, you are going to have to create a user profile to get started. We have published several Revenue 411 videos, which provide step-by-step instructions for those folks trying to use MyPath. So if you're new to the system, you're trying to get signed up, you're trying to file returns, you're trying to make payments, go check out our Revenue 411 videos because they are a pretty good resource for walking you through those steps. It is important to note that under regulation, any payment of $1,000 or more must be remitted electronically for this tax. So I strongly encourage you to use the MyPath portal rather than sending a check in the mail to avoid any additional penalties. If you have any questions related to withholding tax or those requirements, I encourage you to check out our REV 415 Employer Withholding Information Guide or our website, which is revenue.pa.gov, and you can find additional resources on employer withholding. All right, so next up we have sales tax. First question is, what is it? Pennsylvania sales tax is levied on the retail sale, consumption, rental, or use of tangible personal property, including digital products and certain services in Pennsylvania. Currently, Pennsylvania sales tax rate is 6%. However, by law, a 1% local tax is added to purchases made in Allegheny County, and a 2% local tax is added to purchases made in Philadelphia County. In Philadelphia. There are some minor items exempt from sales tax, which include food that's not ready to eat, candy and gum, most clothing, textbooks, computer services, pharmaceutical drugs, sales for resale, and residential heating fuels such as oil, electricity, gas, coal, and firewood. Generally, services to the human body, such as haircuts, massages, etc., are also exempt from sales tax. Additionally, permanent landscaping services, not grass cutting, but permanent landscaping services are generally exempt. So when to collect sales tax? Sales tax must be collected at the time of sale unless the sale is on credit. Taxes due on credit sales must be remitted within 30 days of the date of sale. So a seller is liable for reporting and remitting taxes and fees with the sales tax return covering the period in which either a taxable sale was made or the tax or fee should have been collected. For those of you who are familiar with accounting terms, I said earlier, this is the accrual basis of accounting. So the most commonly used accounting method where business reports income when earned and expenses when incurred, as opposed to cash basis accounting, which reports income when received and expenses when paid. So just real quick, we'll talk through an example of that. In August, you sell a widget to Sam for $1,000. Since the widget is a taxable item, you charge Sam 6% sales tax, which is $60. However, Sam only pays you $640 in August, and he promises to pay the remaining $420 in September. Under Pennsylvania law, you are required to remit the full $60 of sales tax due on the sale of the widget in August. Please be aware that the seller may be assessed for failure to collect taxes and fees, plus charges for appropriate interest and penalties. So you want to make sure that you are collecting and remitting the way that you should be. We always get questions about what sales or services are taxable. That is a hot topic, and we're not going to go too in depth during this presentation. So if you do want more information on that, we have a retailer's information guide, which is the REV 717, and that does include more detailed taxability lists. Our next question here is, when is sales tax due? So unlike withholding tax, sales tax filing frequency may vary. We said withholding, you filed every quarter. For sales tax, when you're a new sales tax filer, you're set up as quarterly, meaning that your returns will be due in April, July, October, and January, but your filing frequency can change. So every year, the department reviews each business that files returns and determines whether or not the filing frequency should be changed. If a change is made by the department, the business is notified in writing. It's very important that you pay attention to these notices because you don't want to be in a position where you were a quarterly filer, you've been changed to a monthly filer, and you weren't aware of that. Then you're going to start collecting penalties and interest. So again, just know that we do review annually. I think it's the third quarter of every year when we start to review to see if there needs to be a change in filing frequency. The last question here is, how do I file? So like withholding tax, we encourage that you use MyPath for filing and paying. Last month's session was getting started with MyPath. So if you missed that, that is a good one for those of you who aren't familiar with MyPath. Again, you have to have a user profile. So it is important that you sign up before getting started. For sales tax, the department also has third-party vendors who provide e-filing software for those taxpayers who don't wish to use the department's e-filing option. We have an approved list of software vendors available on our website at revenue.pa.gov. But just like withholding tax, under regulation, any payment of $1,000 or more must be remitted electronically. So you want to make sure that you take advantage of that. All right, so moving on to use tax. Use tax is by no means unique to Pennsylvania. Every state that has sales tax also has use tax. So the purpose of use tax is so that Pennsylvania businesses are not put at a disadvantage to businesses who do not charge sales tax. Sales tax is imposed on taxable goods and services at the time of sale and collected by the seller. In instances where the seller does not charge sales tax on taxable items, the purchaser is responsible for remitting the tax on their first use. This is use tax. So use tax exposure occurs most often when a business buys taxable goods over the internet or through the mail, and the seller does not charge the PA sales tax. In these cases, the purchaser must pay their use tax obligation in the month following the month of receipt in Pennsylvania. This is also true for purchases a business makes while out of state where no sales tax is charged. The item becomes taxable upon delivery into Pennsylvania. So Pennsylvania's, or the Department of Revenue's, audit experience shows that most businesses do owe use tax, but many don't actually pay it. It is estimated that upon audit, there's about 80 to 90% of businesses that are found to owe use tax. So it's important that you educate yourself on use tax and make sure that you are following proper procedures. We do have a use tax voluntary compliance program, which allows you to go through your records and voluntarily come forward and pay any use tax liabilities. Maybe you've never heard of use tax before. Maybe you didn't realize that no sales tax was charged, but rather than wait until we actually audit you and charge additional fees, you can self-report any delinquencies, and then the Pennsylvania Department of Revenue will waive the penalties. So how do you file and pay use tax? Any business that incurs use tax liabilities on a regular basis is encouraged to register for a sales and use tax account. This can be done via MyPath. If you are already registered for sales tax, then you can file any use tax along with your sales tax return. If the sales tax return is filed timely, then use tax is considered timely no matter what the filing frequency is for your business. If you're not required to be registered for sales tax and you have a use tax liability that needs to be paid, you can still file the use tax return electronically via MyPath. It's right on the MyPath homepage. So this means you don't have to have a user profile just for the use tax return. And again, that's more for those like one-off items. You're not regularly incurring that use tax liability. All right, so while the sound of filing and remitting use tax might seem unsettling, remember that our education and enforcement of this tax may help to level the playing field for your business. So without our efforts, PA businesses operate at a 6% disadvantage to online and out-of-state businesses. For example, taxpayer A opens a kitchen supply business. As part of their business, they need furnishings for the business office. They pursue different quotes to get the best deal. In the first instance, they get a quote from an out-of-state seller who can ship the goods into Pennsylvania via third-party freight. The out-of-state seller is not required to charge sales tax. In the second instance, the taxpayer gets a quote from a Pennsylvania business that by law must include sales tax. When you first look at it, it looks like the better deal is with the out-of-state seller. So many taxpayers would agree with that, and they would make the purchase, resulting in a lost sale from a Pennsylvania business and essentially lost tax revenue to Pennsylvania. However, once you apply the use tax, the out-of-state seller purchase price actually becomes $10,706. So when the tax is calculated, the Pennsylvania business actually has the better deal. So this is the purpose of use tax. It's to keep PA sellers from being undercut by out-of-state sellers. Sales and use tax would not apply on products purchased if you are selling to a customer intact. All right, so now I want to take a moment to talk to you about the Pennsylvania exemption certificate that's also known as the REV 1220. This exemption certificate is used by a purchaser and seller to document the reason for sale of taxable property or services where tax was not collected. So if it's properly completed and accepted in good faith, the REV 1220 will relieve the seller from the collection of tax. Exemption certificates are required to substantiate all exempt sales with the exception of the following. So sales to governmental entities, sales of non-taxable tangible personal property or services, and sales where delivery is required to be made outside of the Commonwealth. You do not need exemption certificates for that. There are a couple of important reminders for the PA exemption certificate. So the first is that there is no generic business exemption. Many people think that just because they are a business, they are tax exempt. That is not the case. When completing the form, the reason for why the property or service is exempt must be filled out, and it must be signed and dated by the purchaser or lessee in order to be valid. So as a seller, you need to make sure that this is properly completed and that it is signed. Sellers should also be aware that a hard copy exemption certificate must be kept on file by the seller and should show both the front and the back pages. Documentary evidence must also be retained by the seller on these transactions. So we do suggest that you staple a copy of the sales receipt to the exemption form so that if you would ever get audited, it is right there together. It makes life a lot easier. All right, so real quick, let's talk about some tips for success and resources that the department has to offer. The first tip for success is to maintain adequate records. So a question that we get all the time by businesses is, how long do I need to keep my business and tax records? There is no clear answer to that question since each business is different, but I'll provide you some general advice. Most of the time, the answer is going to be 4 years, which means the current year plus the previous 3 years. For payroll, you'll want to keep complete payroll records showing the proper withholding and remittance of Pennsylvania personal income tax and wage expenses for at least 4 years. For mortgage, capital asset, and investment records, you'll need to maintain those documents throughout the life of the obligation. So those can be used for depreciation and cost recovery calculations, so you need to keep them throughout the life of the obligation. For purchases made during a tax year, you'll want to keep records that will help document your current assets, inventory, and claimed expenses against income. Again, you want to keep those for 4 years. You also need to keep records of any sales tax paid by you at the time of purchase or use tax paid by you as needed. If you operate in multiple states, you'll need to keep detailed records of Pennsylvania sales, as well as detailed records for every other state where you do business. You'll want to keep a file of all exemption certificates and write the transaction number at the top, or like we said, staple the receipt to make it easy to find in the case of an audit. If you do this, you should have the transaction number right there, so you wouldn't really need to write it across the top. But again, just some good habits to have. And then while we can't recommend a specific software product for use for record management, we will let you know that there are various software products available that will help you to keep your books and records in proper order. Lastly here, if you have a smartphone, we also recommend that you download a free scanner app so that you can use the camera, save PDF copies of your receipts when you're traveling. You don't have to worry about them getting faded in the sun or you misplacing them. I apologize if anybody can hear, there is a fire truck going by right now. All right. So the next tip for success is to keep your address up to date. So we're going to talk about address updates, and we know that there's going to be people who think like, gosh, who cares about that? This might seem minor, but it is often overlooked, and it is important to help communicate effectively with you. Many taxpayers get behind on their tax obligations simply because they're not receiving correspondence from the department, usually because those items were sent to the wrong or an old address. As I mentioned when talking about sales tax, every November, the Department of Revenue reviews the amount of sales that an entity has. They may determine that your filing frequency needs to be increased, bump you up to a monthly filer instead of a quarterly filer, maybe because you had an increase in sales volume. In this case, if your address isn't up to date, you wouldn't have known that you're now a monthly filer, and you're now considered delinquent by the due date. So again, it's super important. This is something that you can update through MyPath. Delays in correspondence about overdue tax liabilities extends the time that it takes to resolve them and causes additional charges like interest, penalty, and possible collection agency fees to accrue. So if you are familiar with MyPath, once you're logged into your profile, there is a More tab across the center of the screen. You would click on that, find the names and addresses panel, and from there you can manage your names and addresses and make updates as needed. If you need to complete that transaction, and obviously I went through that really quickly, again, we have a Revenue 411 video out there, which can be found on our website for updating your address. Okay. Sorry, I was checking out the question and answer real quick. It looks like folks are doing a great job at answering them. I do want to address the last one that Cheryl just put in there. She said, if you log into MyPath, or do you log into MyPath, even if you do not have everything set up yet or have any revenue yet? So once you've completed the online business tax registration form, you'll get a confirmation number, and you can use that to set up your MyPath profile. So as long as you have some type of information to establish your MyPath profile, I would definitely recommend going in there and getting it set up, because then you can ensure that everything looks right. You can also file and pay right in there. You can see any notices that are sent by the department. So again, as soon as you have some type of information, even that online business registration confirmation code, I would recommend setting up your profile. All right, so the next tip for success that we have here is file and pay on time. So for income taxes, this is generally once a year event, but I can't tell you the number of times we've heard people say they forgot that they were due. Failure to file and pay income taxes or estimated tax payments due can result in penalty and interest charges. Another feature on MyPath is that you can set up due date reminders for all of your tax accounts to ensure that you are compliant with filing and payment deadlines. So definitely take advantage of that if you are somebody who is new to this or you think you might forget. For trust fund taxes, due dates vary depending on the amount that you are regularly collecting, as I mentioned. So be sure to educate yourself on the business's filing and payment frequencies. There is information on our website pertaining to both withholding and sales tax obligations. Again, the department applies penalties for late filing as well as late payments. So be sure that you're properly submitting everything. And even if you are a little late for payment, make sure you get in there and you get that return filed and then go in and make your payment. All right, so the next tip for success that we have here is to have separate bank accounts for trust fund taxes. We do recommend that you keep a separate bank account to hold trust fund money and pay the tax due. If you don't keep them separate, you could end up spending the trust fund money and not realize that you're doing it. So in general, it just increases the chance of misusing the tax money. You don't want us to audit you and find that out. As mentioned earlier, you cannot use trust fund money for business or personal expenses. It is important to know that using trust fund money for anything can be considered a criminal offense. So just to avoid anything, we strongly recommend that you keep separate bank accounts to store that money. All right, our next tip here is to take advantage of electronic services. So I've talked about a few of these as I went through the presentation, but again, the fastest and most effective way to get things done is online through MyPath. Back in March of 2020, everything shut down due to COVID. There was nobody in the office to manually process items. Using electronic services helped us to keep things moving. So even when you take people out of the process, you can still move things along if you take advantage of these electronic services. You can schedule due date reminders, as I mentioned. You would receive a notification when filings or payments are due. You can use MyPath to view, save, or print your notices. You can request an electronic statement of account that allows you to see how your payments were applied and what credits you have sitting on your account. You can make electronic payments. As mentioned several times in this presentation, payments of $1,000 or more must be made electronically. Otherwise, there is an electronic funds transfer or EFT penalty applied to your account. So the best way to avoid this is by paying electronically or even pre-scheduling automatic payments. And again, the department has instructions available for each of these services on our website and many Revenue 411 videos available to help walk you through the process. All right, and then our final tip here is to safeguard your data. So as a business owner, it's important to protect your data and confidential information at all times. So let's go over some tips to help ensure that your systems are secure. So first one here, install anti-malware or antivirus security software on all devices. So this is laptops, desktops, routers, tablets, and phones, and automatically update that software. Use strong passwords of 8 or more characters. Use different passwords for each account. Password protect wireless devices and consider a password manager program. Encrypt all sensitive files or emails. Backup sensitive data to safe and secure external source that's not connected full-time to a network. Make a final review of all return information, especially your direct deposit information, prior to e-filing. Wipe clean or destroy old computer hard drives and printers that contain sensitive data. Limit access to taxpayer and employee data. And then finally, it's not on our screen here, but check the IRS e-services account weekly for the number of returns filed with the FEIN. If you or somebody affiliated with your business feels like they are a victim of fraud, please contact our fraud detection and analysis unit. They are there to help you in these situations. I hope that this doesn't ever apply to you, but again, tax fraud is a continuous threat. We constantly have people who are impersonating the Department of Revenue, so make sure that you are very careful when providing your information. Again, going back to MyPath, if you create a MyPath profile, you can see notices that are sent by the department. So if you get a notice requesting information and you want to see if it really did come from the Department of Revenue, you could log into your MyPath profile and see if it is something that we sent out. All right, so now that we reviewed some tips to help you be successful, let's go over resources that will also help you to achieve success. A lot of people ask where they can get useful tax information. The first place that I would recommend is our website. Again, that's revenue.pa.gov. This slide here shows what our homepage currently looks like, but we are always making updates, so it is subject to change. Currently, a lot of the information that you need is either in the top toolbar or the icon belt down the center of the screen. So from the top toolbar, you can easily navigate to our online services, forms and publications, get assistance, or obtain other general tax information. The middle icon belt provides access to our most popular services. So here you'll see MyPath, make a payment, where's my refund, property tax rent rebate, and customer service. We do like to point out that our website is compatible with all devices. This here, for example, is our mobile view, meaning you can access it anytime, anywhere, even from your smartphone. And the screen here lists a few additional online services that are available out there. Most often, people who are visiting our website have a specific question in mind. So we encourage that they use our online customer service center. The first thing you want to do is click either the image at the top of the website where it says visit, or click the icon in the center of the screen that says customer service. Once you click that icon, you'll type in whatever question or term that you are looking for answers to, and you will hit search. Any frequently asked questions relating to what you entered will populate at this point. The online customer service center does contain answers to thousands of commonly asked tax questions. So we definitely recommend that you check this resource out before attempting to call or email. We do realize that we have high call volumes. So again, make sure you look here first. We do update this regularly. So you should be able to feel confident that there is an answer out there for you. We also vet these answers through our Office of Chief Counsel and our subject matter experts. So you should, again, feel comfortable that you are getting a good answer here. If you still have a tax question that wasn't answered, you can submit a question to us. So if you click at the top of the bar, the toolbar there that says submit a question, it will require you to create an account. And then once you're logged in, you'll have access to over 30 categories that allow you to direct your question to the proper place. So just a reminder, search for what you need first before submitting a question. And then you can submit a question to us. We generally have about a 72-hour turnaround time. So once you've submitted your question, you'll immediately receive a confirmation notice, and an individual specialized in that area will respond. Like I said, generally within 72 business hours. You can see on this screen that you're going to get a reference number once you submit a question to us. So make sure you keep a hold of that in case you ever need to follow up. Also, going back to MyPath again, if you've created a MyPath profile, you can send us a message right through the portal. So you don't even have to go through this process of creating another logon. You would just log into your MyPath profile and send a message. If you would like to actually talk to a representative on the phone, you can contact the department's Customer Experience Center, which is available Monday through Friday from 8 to 5. Our representatives in the Customer Experience Center are trained to handle almost all calls for the department. So business taxes, you can see the number on the screen there, 717-787-1064. If you have issues with using MyPath or questions about MyPath, make sure you use that direct number, 717-425-2495, extension 72841. And then finally, if it is related to personal income tax, you'll call the 717-787-8201. Should you feel like you need face-to-face customer service, you can visit a district office nearest you. There is a list of all the revenue district offices as well as their contact information available on our website. We do recommend that you call ahead and make an appointment before visiting one of our district offices. So again, when COVID hit, a lot of those folks were home headquartered. We don't have a ton of staff who's always in the office. So making an appointment ahead of time will guarantee that you're not waiting for an extended period of time. Of course, you can walk into the district offices, but appointments are strongly encouraged. All right, and then last but not least, let's review what rights you have as a taxpayer. So we have recently revamped our Taxpayer Bill of Rights. Pennsylvania has a Taxpayer Bill of Rights that ensures equity and fairness in tax administration and enforcement. So the Taxpayers Bill of Rights sets for uniform procedures so that the Pennsylvania Department of Revenue treats all taxpayers equally and fairly. As a taxpayer, you have access to the following guarantees. So the right to quality service. If you ever feel that you do not receive this type of assistance, please share your experience by visiting our website and completing our customer feedback survey. So we do actually look at that. You know, if you talk to a representative and you have a great experience, we like to use that as praise or to go back to them and tell them that they are doing a good job. But also, if you've had a bad experience, we will pull the call, look at the account, and make sure that corrective actions are taken. Next up here, you have the right to be informed. So taxpayers have the right to be informed and receive clear and easily understandable communications from the department. We as a department are working to plain language our content. So we realize that taxes are difficult and sometimes the way we word things is very confusing. We are working towards making that better. Sometimes, you know, we think it's clear and it still may not be. So again, you can use feedback surveys to communicate that with us and we'll see what improvements we can make. The next thing here is you have the right to confidentiality. So the department will not disclose taxpayer information unless authorized by the taxpayer or by law. So we do take confidentiality very seriously. If you have anybody who calls into the department who is not listed on the account, there will be additional things they have to do in order to speak to one of our representatives. So just be prepared that we do have our own power of attorney form. And then lastly, we have the right to retain representation, or not lastly, but fourth, right to retain representation. Taxpayers have the right to retain an authorized representative, such as a CPA or an attorney to represent them. It is not required, but it does make filing and paying taxes a lot easier. And then finally, you have the right to challenge the department's position and be heard. So per your right to challenge the department's decision and be heard, you can file a petition with the Board of Appeals, but it is important to know that there are appeal timeframes which will need to be followed when petitioning the board. So the general timeframe to file an appeal with the Board of Appeals is 60 days from the mailing date of the assessment notice. If a taxpayer is not satisfied with the decision of the Board of Appeals, they may file an appeal with the Board of Finance and Revenue. The general timeframe to file an appeal with the Board of Finance and Revenue is 60 days from the mailing date of the decision from the Board of Appeals. To appeal that decision, a taxpayer may file with the Commonwealth Court of Pennsylvania within 30 days of the mailing date of the decision of the decision of the Board of Finance and Revenue. So as you can see, there's a whole process that has to be followed has to be followed. If you disagree with the Department of Revenue, you then go to the Board of Appeals. If you disagree with their decision, you go to the Board of Finance and Revenue. And if you disagree with their decision, you would go to the Commonwealth Court. They are very, very strict on following the appeal timeframes. So if you do want specific appeal timeframes for each tax type, please refer to the REV 460 and the REV 1799A. All right, so we discussed the rights of taxpayers and their representatives. Real quick, we're going to talk about the department's rights. Earlier, we talked about record keeping. This ties into the department's right to audit. Keep in mind that we do not perform audits just to find out what businesses are doing wrong. It is more of a standard business process to ensure everyone knows how to do things the right way and so that all businesses are treated equally. Anytime an audit is conducted, the department will provide the taxpayer with a complete explanation of the audit findings for that individual taxpayer and their rights during the process. So again, if you do get an audit notice, don't be alarmed. It doesn't mean that you did something wrong. Audits are a standard business practice of the Commonwealth. All right, and then this slide here talks about general enforcement. So we're having the session today so that you don't land here. We do want to let you know that the department does have these options, but we're trying to help you to avoid any further enforcement. So if you don't file a return, don't pay the tax due, or file a timely appeal for a tax balance, the department does have the option to use the tools listed on this slide. So the left side of the slide shows some of the more common enforcement tools, while the right side of the slide shows some more of the tools that we use when we have little cooperation from the taxpayer. So again, yes, you will get notices from the department. Yes, we do make outbound phone calls. A lot of people are confused by that because I don't think the IRS makes outbound calls, but we do. We can file liens. We can revoke your licenses. We can wage garnish or bank attach, and we can send your cases for further enforcement. But again, our goal in inviting you here today is to help you avoid the scenarios where these tools are used. All right, so here we have a second slide for trust fund tax enforcement. You might wonder why we have a second slide on enforcement. Again, trust fund taxes are treated a little bit differently. Failure to timely collect and report sales tax money can lead to civil penalties equal to 50% of the unpaid tax and criminal penalties for theft, embezzlement, or misappropriation of government funds. So this is in addition to that standard penalty and interest charged by the department. This here is an example of where the cost of non-compliance is much higher than the cost of compliance. Something unique to trust fund liability is that it attaches to the responsible party. So the law says that the liability is enforceable against such person, his representatives, and any person receiving any part of such fund. So on a practical level, that means that an owner of a limited liability company that goes out of business with unpaid trust fund taxes remains liable for those taxes. The liability doesn't just go away with the defunct business. So this means the department will pursue collection against the individual using all available enforcement tools, including liens. Again, we don't want you here. We're not trying to scare you. We're meeting today to help you understand your responsibility so that you don't end up here. We just need you to know that there are consequences if you don't follow kind of what we've outlined. All right, so we previously talked about protecting yourself so that you don't become a victim of fraud, or if you think you have been a victim of fraud. But this slide here is telling you what to do if you suspect someone else is reporting fraud. Tax evasion is a crime that hurts all Pennsylvanians because when taxpayers don't pay their fair share, it decreases the revenue available to fund essential state programs and services. If you suspect tax fraud, we're asking that you report the activity directly to the PA Department of Revenue, including as much detail as possible. So you can use the contact information listed on this slide, or you can just go to our website, type fraud into the search box, and then report suspected tax fraud activity will pop up and you can submit the information there. After listening to this presentation today, if you find yourself thinking that you may have a tax requirement that you weren't aware of, we do have a voluntary disclosure program, often referred to as VDP. The program was created for individuals and businesses that have not met their tax obligations because they were not aware of them. So the department's liaison officer will work with you to make sure that all of your filing and payment requirements have been fulfilled. And there are incentives for coming forward. So in return for voluntary disclosure, filing missing returns, and clearing tax debts, taxpayers are only responsible for the payment of tax and interest. Any penalties for all taxes administered by the PA Department of Revenue will be waived when the requirement of the voluntary disclosure agreement has been completed. It is important to know that this program is only available to those taxpayers who are not registered with the department and for which no investigations or collections have begun. So if we've reached out to you saying you're missing this stuff, you wouldn't be a candidate for voluntary disclosure. But if you're watching today and you're like thinking you should have paid something or you should have filed taxes and you haven't, you absolutely can apply for the voluntary disclosure program. Of course, we want you to know that we have several social media platforms. So this is kind of a shameless plug, but we do generally use these outlets as a mean to push information to our taxpayers. So we will post tax law changes, fast facts, anything new that's going on with Pennsylvania taxes or the Department of Revenue. Also, if we create any new Revenue 411 videos, we'll put them out there. So definitely go check us out. Facebook is probably our most commonly updated platform, but we do use LinkedIn and Twitter as well. All right, and then the Rev 588, the Rev 717, and the Rev 415 are all staples for new businesses. These are great resources. They provide a lot of good information for getting started. They're all available on the department's website under the forms for businesses, but I can also put the link in the chat here so that you have easy access to those handouts. All right, so that concludes our presentation for today. We want to thank you for being here. We hope that you are successful and that you found this presentation to be informative. Again, it looks like folks are answering questions in chat, but Jason, if you are able to export that Q&A and send it to me, we can make sure that any questions that were not answered yet do get answered and sent back to you guys.
Sure, and I'll stall for a few more minutes for these Q&A questions. Thanks for participating today. Obviously, Alicia, appreciate you being here and your team. Hopefully there's a few answers some of our constituents have found. And you'll receive, just for everybody who's attending, you'll receive an email from us within the next 1 or 2 business days. It'll have the slides, any of the additional resources you saw today, and a link from us to sign up as an individual client of the SBDC. And it'll route, when you sign up, it'll route to whatever the SBDC is in your area. You'll also receive a request to complete a survey. And I do want to do the poll. Actually, I don't have access to it any longer, Alicia. Can you launch the poll? I lost connectivity for a moment, so it turned you into the host. Just take a second, if you could, to fill out the poll as well as the survey that they send afterwards. We appreciate it. It only takes a few minutes. And I guess that's all the announcements that I have at this point. I'm just trying to stall a minute so you can get through a few more questions.
I appreciate that.
Sure. How do you handle that, Alicia, if they don't get through the questions today?
If you're able to send me a copy, we can get back to you. I cannot, for some reason, see the Q&A. I mean, the chats. Actually, I lied.
Okay.
I can see
I can
it now.
see one chat. Mostly Rachel's been communicating content
Resources.
out to
Awesome.
everybody, which is good. Let's see. Answered. Open. Okay. And without any further ado, I think we can wrap this up. You have 13 questions. I'll try to get those to you.
Appreciate it. Thanks so
That are
much.
not completed yet. Okay.
Thank you everyone for being here, and thank you, Jason. We appreciate it.
Okay.